Hello, wishing our viewers a very happy and bright morning. And Shriyansi, good morning to you. Of course, it's a weekend, so it's a happy morning also. And the way markets are faring, be it Indian markets or be it US markets, fresh record high again for not just Indian markets, for even US markets. But now, what are the key factors to watch out from here? There is a key inflation reading which has to come from Fed, but a lot of news and action from Indian markets also. How is your trading going to pan out? We'll get you all the action. We'll set you for the trading day. So let's get started with the US markets first. Good
absolutely. Well, yes, absolutely. When you take a look at the US markets, what you're looking at is that the Thursday's trading session did end on a strong note, with the three major averages posting gains and the S&P 500 closing at a fresh record high as well. For the third time this week, when you take a look at the Nasdaq composite, that also notched 4 straight winning days as well, and that is the kind of handover that we saw coming in from that one. Now, a batch of economic data is also something that we're looking at in terms of what else is on our radar. There's initial jobless claims data as well that had fallen more than expected, indicating a stronger labor market as well, while the final reading of second quarter gross domestic product also came in at 3%. That is also something that we're keeping a very close eye on. Now, in terms of the action, in terms of a week-to-date basis, the three major indexes are higher for the week, with the S&P 500 up nearly 0.8%. When you take a look at the 30 stock Dow as well, you're looking at that index being on pace to rise about 0.3%, and Nasdaq composite on track for a roughly 1.4% week-to-date advance. So that largely is the kind of handover that we're looking at here.
All right, so the key economic indicator that would shape the way ahead now. There's an inflation reading which has to come from, and let's see what key comments come in from Fed officials also. But then let's get you action from other high economic indicator. First, let's get you crude. WTI fell 3%. That's a reason is because there's a potential Saudi output increase. That's what we are eyeing on, and production increases on the hopes of of course, it's mounting some hopes. Whenever there's a slowdown or a fear of slowdown, that's one sign where oil also starts to react. But here, some respite coming in. Precious metal, if you talk about gold, they are also on a record-breaking rally. Silver is scaling up. In fact, gold is hitting record high every day. But then, yes, more on the crude. Brent crude, if you talk about YTD, it has fallen nearly 7%. It's been consolidating on the lower levels for the longest of the time. But now looks like some respite coming in. Some fears. Market seems to be shrugging off the fear of slowdown also. Talking about the other precious metal, silver scales 12-year high. It's not just the gold which is glittering high and bright and shine, but it's now the other precious metal which are also catching up. In fact, silver also has been a stellar rally, and now it is at a 12-year high. 36% up it has been till date, YTD, if you talk about. And not just gold and silver. If you talk about other metals also, platinum, which is 2.2% up, palladium is nearly 1%, more than 1% up. So safe haven as well as the raw material appeal, this is what is fueling silver move also. But moving on, let's get you more on what is that the reason that the oil market or maybe the prices in crude is reacting. Let's put that perspective also into place. Let's put the spotlight back on oil, wherein reports suggest that world's top crude exporter, which is Saudi Arabia, is in fact preparing to abandon its unofficial $100 per barrel target as it readies to raise output in a bid to claw back market share. On a divergent note, OPEC has been cutting output to support prices along with allies such as Russia. The prices are down nearly 5% this year, which is amid increasing supply from other producers, especially the United States, as well as weak demand growth in China.
Well,